Today, Sam Bankman-Fried faces fresh criminal charges in a newly unsealed indictment. New York's Attorney General accuses crypto exchange CoinEx of operating without registration.
Carl, these new charges now really ratchet up the level of seriousness for Sam Bankman-Fried, and he could be facing additional time if the government is able to prove its case in this slew of new charges just added to the FTX case.
By now, you've undoubtedly heard about FTX and how its founder, Sam Bankman-Fried, once the super young face of crypto, was essentially just running a Ponzi scheme. Honestly, the FTX scandal is big and interesting enough to be the plot of a Wolf of Wall Street or The Big Short-style movie all on its own. This case has raised questions like, can the same mistakes made with FTX be avoided in the future? Does crypto need more government regulation? What's the new update with the FTX case? In this video, Kevin O'Leary has discussed the new narrative of the FTX case. He's also shared his view on regulation and whether the FTX fallout will change the view of VCs to invest in crypto. So stay tuned until the end of this video, as we're going to break down the latest updates and news regarding the whole FTX fiasco. And of course, for more of the latest videos on the economy, crypto, and the market, be sure to subscribe to my channel. Let's get into it.
You're right, the narrative on the whole FTX issue has changed. It's no longer about the trial, which will happen who knows when, but more about recovery. And so since this story broke November 6th, a lot has transpired in terms of identifying assets. For example, now remember, these are alleged and rumors, but it's where there's smoke, there's fire, because the regulator has not released the trading records yet from each of the accounts. But here's what we got so far. And obviously, I'm an active participant. I've got my own army of lawyers like everybody else does, both as an equity shareholder in both FTX International and FTX US, but also I had over $10 million in assets inside multiple FTX accounts, which were scraped with no trading records left. So let's go first to recovery. It looks like the Bahamian government has $4.2 billion sequestered. And then there's another $1.2 billion alleged to be sitting in the US, FTX US, another $400 million of cash. But now what everybody's focusing on are all the assets inside of Alameda. Remember, Alameda bought a lot of stock, a lot of deals. They own a ton of Robinhood. They have a bunch of other assets in public companies. They own a piece of WonderFi, for example. And so all of these are being looked at by hedge funds and high net worth individuals and private equity firms, because in order to sell Alameda, which will be done in an auction process, you need a first bidder, a backup bid. And that's going to end up being somewhere in that $800 million to $1.5 billion range. That's sort of the bid ask right now on that. So there's a ton of cash sitting around here. And so I have to be, I'm always optimistic, but before this whole thing plays out, there's going to be some recovery. And I don't know how long that's going to take. But what everybody wants right now that had an account is to turn on the server again so you can see your account, see the trading records, but keep it gated so you can't put money in or take it out, but at least see the records before April 15th when everybody has to pay their taxes. And so you got a lot of cross currents going on, but nobody's talking about Sam Bankman-Fried anymore or the trial or alleged fraud. They just want the money, and that's the way it should be.
Bankman-Fried was previously charged with 8 counts, including fraud and money laundering and other charges over the collapse of the now bankrupt exchange. Now he faces 4 additional charges in connection to his operation of FTX and its related companies. Those include conspiracy to commit bank fraud and conspiracy to operate an unlicensed money transmitting business. His charges also include conspiracy to make unlawful political contributions and defraud the Federal Election Commission. For now, Sam Bankman-Fried pleaded not guilty to any federal charges, and his trial will begin on October the 2nd. The broader consequences of the FTX fiasco for the cryptocurrency industry will take time to unfold. The FTX US bankruptcy filing has caused many customers, investors, and businesses to lose their money. However, in Japan, some FTX customers are actually getting their money back. It's the first time FTX crypto investors have been able to recover money locked in since November, FTX customers in other countries are still at risk of losing their money, though. They're still waiting for answers. FTX was transferring funds from exchange to Alameda, which was the trading side of things. We all know that in a regular banking environment, this is just a no-brainer, a no-fly zone. When further asked how the same mistakes made with FTX can be avoided in the future, and whether crypto needs more government regulation, Kevin O'Leary responded with the following. Let's get into the next clip to hear him out.
Yeah, John Ray testified in front of the Senate a few weeks ago. I testified there as well. What everybody's waiting for are the trading records. So if it's alleged that transactions occurred between Alameda accounts and FTX accounts and clients' accounts, the alleged so-called trades, then show the records. Everybody wants to see them. And so obviously these records are going to have to come out before a trial. And I think because we're in this discovery period in this trial, maybe it's going to take a while to get them out. But, you know, when people tell me, did that happen or not? Well, show me the records. I mean, like everybody else, we've got to see the records. And they exist. Apparently they're backed up on the AWS service Amazon has, and we've got to get them. So Ray's under quite a bit of pressure right now by account holders. You know, you make a claim like that, you got to show the records. And so let's see them. Now, to your point on regulation, if there's any silver lining to this whole FTX thing, when I went down to those hearings in Washington, when the hearings were over, they take about 4 hours or so. All the senators are still there. So we started, you know, we mingled and we started talking. Here's what I realized about this. These senators are they're fatigued. They're really tired of gathering every 6 months when the next crypto company blows up and goes to zero. I mean, just last week, Genesis filed for bankruptcy. Every week, there's another one going to zero because they're totally unregulated. And
FTX lent more than half of its customers' money to Alameda Research to place risky bets. Even worse than that, Alameda Research was a sister company of FTX, meaning that FTX was essentially passing money to itself, gambling with its customers' funds. If that sounds shady, it's because it is. Kevin O'Leary commented that every week there's going to be another company that's going to zero if they're not regulated. He believes that there's a lot of scams, pump and dump schemes, and rug pulls that need to be regulated, and there should be some type of governance over this so that people don't continuously lose money investing in crypto. It's also important to note that FTX wasn't just favored by small-time investors. Major venture capital groups also bought in, and everyone has lost a good amount of their money. Will this change anything when investing in crypto-related projects and companies? Let's hear Kevin O'Leary's thoughts on this. But before going ahead, be sure to give a big thumbs up to this video.
Feel like idiots, of course. But the real question is, will this change how we invest? And the answer is no. So let me explain why. FTX was a startup, a big one, but a startup. And we all invest in startups. I don't care if you're private equity or you're venture, there's capital around for startups because the returns, if you get a successful deal, are extraordinary. So if you look at data back from 1954 in the Boston area where venture capital started, and you look after all those decades, 8 out of 10 deals either fail or are living dead, and 2 out of 10 are extremely fantastic outcomes and pay for all the other 8 mistakes times 20, times 30, times 40. So for every FTX, there's a Google. You know, for every Lehman Brothers, there's something else. There's always something going to zero and something going to the moon. That's just the way it is. And so when you look at due diligence, you ask yourself, okay, let's say we had done more due diligence. Would that change the outcome when you know 80% fail? Probably not. Now, they fail for various reasons. In this case, alleged fraud, and we'll see how that plays out. But this doesn't change anything about the way I'm going to invest or, you know, how any of those other firms you just listed are going to invest. And the diligence done here, I don't know if you know this, but Tiger spent millions with Bain Capital to diligence this platform before they became one of the lead investors. And everybody knew that. So there is a lot of, you know, when a deal like FTX US comes out and it's so hot to get an allocation, they're not worried about due diligence because they know 8 out of 10 times it's going to fail. They're hoping they're going to get one of those unicorns.
Kevin O'Leary highlighted that the FTX fiasco isn't going to change his way of investing. The implications for the future of FTX and the collapse's impact on the broader cryptocurrency industry are ongoing and difficult to assess. On January 3rd, 2023, Sam Bankman-Fried pleaded not guilty to federal charges. His trial will begin on October 2nd. Until then, we'll keep a record of what's happening with the case. For more of the latest videos on what's going on with the economy, crypto, and the market, be sure to subscribe to my channel. You can also hit that bell icon to never miss any video. And of course, don't forget to like and share. I'll see you guys in the next video. Adios, and thanks for watching.